Hey, what's up, everyone? Welcome back to my world of stocks. In today's video, we have to talk about Palantir stock because this past week, not only did they report earnings, but news also dropped that the famous big short trader, Michael Burry, held two new short positions in both Nvidia and Palantir, with the put options worth around $187 million against Nvidia and a jaw-dropping 912 million against Palantir. So getting up there close to like $1 billion betting against them. And by the way, he's not the only one, as Palantir is quickly becoming one of the most heavily shorted stocks in the market, even drawing attention from one of the most prolific short sellers out there in Citron Research, who thinks that the stock should be trading for only around $40 a share. Just so you know, guys, that would be a monumental crash of around 80%. So, needless to say, the bear camp is in full gears right now against Palantir, and the bear camp, really seems to be growing against them. And as a result, it's starting to greatly worry investors given the sky high valuation that Palantir trades at, which caused the stock to fall now over 13% this past week on fears that the AI bubble may have already grown a bit too large. And if more Wall Street whales start joining in on the short selling, it could cause the bubble for Palantir and probably many other rich AI stocks to burst, which would likely send the rest of the market falling right along with them. By the way, I am recording this on Sunday, but it's going to take me an extra day or two to edit and upload the video because I've got my wife's birthday and a couple family things to get to right now. So with how volatile Palantir stock has been, and I think that's going to definitely continue, you might want to just take a quick look at current prices to see exactly where Palantir is trading at the time you watch this video. But as of right now, the stock is still up over 200% this year, and much more if we zoom out a bit, which I will do for you guys here in just a second when we talk about that rich valuation. But yeah, as you can imagine, I've been getting a lot of messages and comments asking me for my updated thoughts on all of this. So that's what we'll be focusing on in today's video, with a little more focus on exactly why Burry and other whales have decided to short the stock now, what some of the bearish arguments are for that. And we'll also cover what Palantir's own CEO, Alex Karp, had to say about them in response. And most importantly, I'll of course share with you what I'm doing myself with my own shares as a long-term Palantir investor. How worried am I? Am I selling out of my position? Am I buying the dip? Let's jump into all of that and more in today's video. But let's start first here with the bear case, as that is probably the easiest one to understand. So going back to Michael Burry for a second here, he's usually a fundamentals-based value trader. I think that's probably the best way that I could describe him. It doesn't mean that he's always right in his analysis. In fact, I actually think that I've disagreed with him much more than I've ever agreed with him. But for the most part, generally, he does like to analyze the underlying numbers of a company, their financial performance, and try to find either undervalued or overvalued stocks to be betting on. And when you look at Palantir's numbers right now, they honestly do look pretty insane, as the market cap has already ballooned to more than $400 billion. And mind you, they only did less than $3 billion in sales and less than $500 million in net income all of last year. And so according to Yahoo Finance, the valuation leaves them with a forward price to earnings ratio above 200, a PEG of more than 3.6, and a price to sales ratio of more than 137, which is astronomical. Now, most of the bear camp is focusing a little more on that PS ratio, because a good one is considered around 1. So this is like 137 times bigger than that, which is obviously going to be a huge concern. But I would focus a little more on the profitability metrics, as that is where Palantir really shines because of their strong software margins. However, even there, it's really hard to justify right now. For example, on the PE ratio of 217, the sector median is only around 24, meaning that Palantir is around 800% more expensive than the sector. And while the PEG ratio is a little better because it factors in a few more years of future growth that is still to come, it's still pretty high at 3.6 versus a sector median of around 1.7. At that level, Palantir is still more than 100% higher too. In other words, the valuation is extremely expensive here. And on paper, It really does look detached from the financials and their current fundamentals. And so, for a trader like Burry, it's clear why he would consider this an attractive bubble to be betting against, betting that gravity will eventually kick in and the stock will have to come crashing back down to earth or to reality. But, and this is a big one, you have to consider that we have actually seen similar situations in the past that didn't really result in that. For example, think of the early days of like Amazon or Tesla, or even certain periods for other stocks like AMD or Nvidia. All of those stocks have been called insanely overvalued for years, and there were many periods where they were also among the most heavily shorted stocks in the market. And yet, while the bears were so heavily focused on the PE and PS ratios, maybe rightfully so, by the way, but I instead always argued that it didn't really matter as much where they were currently trading at those times because of how revolutionary their businesses were and what they would eventually accomplish over the longer term. So with Amazon, for example, it was about the future of e-commerce and the cloud. With Tesla, it was the EV revolution. With AMD and Nvidia, it's been, all about chips and how to power all these new technologies, including AI, of course. And of course, all these companies have grown into other verticals too. There's other stuff for them as well, but just kind of at that time, that was more so what investors were kind of thinking of. Anyway, with Palantir now, of course, the bull case is that we are in the middle of this new like paradigm shift with artificial intelligence where data is quickly becoming the new oil. And so if that's the case, if data is the new oil and we're still in the absolute very, very early stages of that, then Palantir may just be the single best company in the world at refining it, at analyzing, managing, and just making it useful in the real world for both governments and commercial companies. In fact, last quarter was their best ever, another record breaker in performance, with just their US commercial customer count alone growing a whopping 65% this past year, while related sales jumped triple digits in the quarter with over 200 new deals signed worth over $1 million each. All this despite the economy still facing all kinds of headwinds, from tariffs to inflation to interest rates and more. So the fact that companies are still swarming to Palantir services is a great sign. It shows that there is actually tremendous real value in what Palantir can offer them. For example, HSS was able to improve 45 minutes of manual work down to just 5 minutes using Palantir's AI solutions, while American Airlines saved tens of millions of dollars in less than a year, and BP has seen triple-digit returns too. This type of performance is why Palantir's million-dollar deals more than 2x'd in the quarter, while their $5 million deals 5x'd as well. And they even landed a new deal with arguably the most important AI player in the entire world, in Nvidia, whose own CEO, Jensen Huang, called the Palantir ontology the single most important enterprise stack in the entire world, which I don't necessarily disagree with. And again, Palantir is really starting to prove that, as their business is not only not sinking in a weak macro environment, but rather it's accelerating, with also about a 200% rise in their remaining commercial deal values, meaning that they're even building up a larger backlog too. And in the future, I just think you're really going to start to see this sort of like snowball effect where if you're a business, you pretty much can't afford to not hire Palantir to help you out. And over time, that's just going to keep stacking up higher and higher with more customers that continue to increase their spending on AI services to remain efficient and even competitive. And by the way, the same goes for their government and military businesses too, where they continue to just get awarded, these gigantic contracts seemingly all the time. These are the reasons why it's a little hard to put a limit on what Palantir may achieve in the future. And it's why bulls like famous tech analyst Dan Ives believes that Palantir is actually on the path to becoming a $1 trillion company over just the next few years, even going as far as to call them the Messi of the growing AI revolution. And biggest reason why is that the market, he feels, is an AI, artificial intelligence addressable market, is one that will be worth trillions of dollars per year in the future. And that's something that many analysts agree with too. Even I myself, I just think AI is going to really revolutionize almost everything we do. It's going to touch and have an impact on virtually everything around the world. And even I myself also believe, because of all of this, that Palantir will eventually break north of a $1 trillion market cap too, because of the tremendous opportunities there. Although, I do think it's going to take a little bit longer than maybe Dan Ives projections. I don't necessarily see it happening, next year, but it is something that I think will eventually come over the longer term. But I'll come back to this in just a second here when I give my overall opinion on everything going on. Now, as it stands, though, we do have short sellers like Burry and Citron Research in the bear camp, while some bullish analysts like Dan Ives and long-term investors like myself are a bit more in the bullish camp. But what does the actual CEO have to say about all of this? Well, in a couple interviews with CNBC, Alex Karp was actually asked directly about the rising wave of short sellers, including Burry and Citron, to which he basically accused them of market manipulation, saying that they were, besmirching the best financials ever and screwing up the economy just to get out of their positions, especially in the case of Burry. He noted that Burry is shorting Palantir and Nvidia specifically, saying that that's a super weird thing to do, his words, given that they are the companies that are really making all the money out there in the economy, adding that the idea that chips and ontology is what you want to be shorting is shit crazy. That's according to him now. He also went on to say that the behavior is egregious and that he'll be dancing around when it's proven wrong, saying, quote, "We are just tripling down on getting the better numbers to make them poorer." So obviously he's not a fan of all of these short sellers, although he has actually said in the past too that he kind of likes them because it motivates his company to perform even better, which he also attributes to other great companies out there too that he feels short sellers try to bring down in order to profit off of their demise, which I can understand, that type of viewpoint. And to be honest, I do like the fact that they use it as motivation to perform better. I think that's the correct approach rather than, just trying to turn them into heavier, bigger enemies. Just kind of take that as motivation to actually perform even better, put out even better numbers each quarter, and then you can cause a short squeeze where the stock can pop and soar even higher. I think that would be the correct approach to all of it. But regardless, let's just talk a little bit more now about my overall opinion on all of this too. And so, as you all know, Palantir is a pretty large position in my personal portfolio, which I've been holding for a long time, and I'm currently up around 1,000% on it too. I will actually be doing an update video on my personal portfolio soon, by the way. So make sure you stay tuned for that, or you're subscribed. We'll have a lot to talk about there too. But I do have to be honest with you guys about Palantir at the current moment, and that's that even though I do have a lot riding on the stock, I actually agree a fair bit with both sides here. Because on one hand, like Burry, I agree that the valuation is technically, pretty crazy and in a bubble. I do think it's much too high at the current moment from a fundamentals perspective, which is why I'm no longer buying any new shares myself at these levels. It just doesn't make, a whole lot of sense to keep buying more when I already have a large position that I'm up so much on. However, I'm also not selling any of my position either. And I certainly could never bring myself to short a stock like this because despite being in a bubble, it's one that I'm not so sure will be bursting anytime soon, but rather I think it's one that will just kind of deflate and inflate at various times with a lot of volatility, but with an overall upward trajectory long term. Just like we've seen, by the way, with other highly valued stocks that also held incredible businesses like Amazon or Tesla and others who, by the way, they did too experience crashes at various times. And I don't think it's crazy at all to think that Palantir could even see, 30 to 40% drops, especially in a, market-wide downturn or an economic recession. But I also think that there will probably be 100 to 200% runs at times too. And that's personally what I'm looking forward to the most, rather than even attempting to perfectly time such a crazy stock like this, where I would very likely lose money making any kind of short-term bets that I could be way off on at any given moment. You could be very right in shorting a stock during a specific time, but then a short squeeze happens and that stock soars, and all of a sudden you're losing a ton of money. So you have to be very careful making those type of short-term bets. Instead, though, like Dan Ives, I just believe that this will eventually become a $1 trillion company long term. So why would I even bother stressing out about the shorter term volatility? My bet is on the idea that data is the new oil of the 21st century, and that Palantir is poised to be one of the biggest beneficiaries of that over the next few decades into the future, along with several other stocks that I'm largely invested in too, like Microsoft, Nvidia, Amazon, Google. I have lots of diversified bets in artificial intelligence. It's not just Palantir that I'm betting on. That would be crazy to do because if I'm wrong about them, then I would get crushed if I'm only holding that single stock alone. But again, that's not the case for me. I actually have a very well balanced out, diversified portfolio of many great stocks that I love right now, including Palantir, and most of which greatly benefit from the rise in artificial intelligence, which again, we're only in the very early stages of that build out. And already Palantir is performing incredibly well. In fact, I know I've brought this up in the past, but I think it is worth mentioning again the rule of 40, a key performance metric that views revenue in the context of profitability. And it's one that is heavily used for valuing companies in the software as a service industry, where it states that if your revenue growth and profit margin together equal more than 40%, then the company is experiencing excellent performance. Well, in the case of Palantir, not only did it skyrocket from an already massive 46% up to a mind-blowing 94% in Q2 of this year, nearly doubling in less than 2 years, but last quarter, again, with it being another record breaker, their rule of 40 metric climbed even more, this time breaking north of 100%. Now, to give you an idea of how crazy this is, of all the enterprise software companies generating at least $1 billion in sales, Palantir is the only one achieving this right now. And even if we look at the top 25 largest market cap companies, it's only Nvidia who holds a slightly higher percentage, which is kind of funny that these are literally the two stocks that Burry is actually betting against shorting. And of course, Nvidia is currently worth over $4 trillion in a market cap. Anyway, I'm not saying that this at all justifies the rich valuation for Palantir, but I'm just pointing out that while Palantir is very richly valued, it's also worth considering that they are in fact a premium company with currently pretty flawless performance and execution. And if that continues, I don't see why this wouldn't eventually become a $1 trillion company too, which is why I can't bring myself to sell, because I just still see this as a company, as a stock that is going to be heading higher over the long term. And I'm willing to ride out all of that volatility until that happens. But hey, that's just me. Those are simply my own opinions and thoughts, what I'm doing myself. What do you guys think? I'd love to hear your own thoughts down below. Are you on Team Burry? Are you on Team Karp? Let me know down in the comment section if you're bearish or bullish on this stock. But hey, thanks again for stopping by, my friends. I hope you enjoyed the video. If it's not too much trouble, maybe hit that like button. I'd appreciate it. But either way, I hope you're all doing well out there. Now we'll catch you in the next one. All right, take care, everybody. Love you. Bye-bye.